Welcome back to the channel, everybody. I have something for you today. I got a few things. I found a few things. I told you I was working on some things here. And this is not the complete body of what I have, but I'm going to give you this a little bit first. Then in other videos, we'll come back and we'll start exploring more of these different articles and PDFs and things of that nature. Okay, so if you like this kind of content, if you enjoy this type of content, smash that like button. If you haven't already, join the family. We're on the train to 100K subscribers. So please subscribe to the channel if you haven't already. Let's jump into this right here. This is from EY.com, and it is titled, "What Digital Assets and DLT Offer Treasury?" Listen, this is what I'm talking about. When it comes down to it, and you're going to see, we're going to go into these documents here. When it comes down to it, we're in the big money game. Nothing has changed. Actually, things have gotten much better for us as the United States government, as well as all of the various corporations within the United States, have come to learn the hard way that not only do they need us, but their systems are fragmented, broken, inadequate, and antiquated. And they're going to need connector pieces. They're going to need us. But let's read this little tidbit here before I get too excited. It says, over the past several years, corporate treasury functions at financial institutions have evolved rapidly by using data and technology transformation and moving from manual processes to analytics-based decision-making and reporting. More recently, distributed ledger technology and the digital asset ecosystem have emerged with compelling opportunities to take this treasury transformation journey to the next level. By accelerating the speed of transactions, automating execution and settlement, that stuff we know about, increasing transparency, reducing costs, and optimizing liquidity. That's key. That's key. And I have a document. I don't know if we're going to get into it in this video or the next members only video. I'm going to film that after this, by the way. So get ready for that one, because that one's going to be impactful, okay? It says here, these solutions can provide significant opportunities for treasury. Now, I ask you before we go further, has anything changed? This article, this document was put out October 24th, 2023. So this tells you nothing has changed. Nothing. We're way ahead of the game. We're in the driver's seat, matter of fact. Oh man, yeah, that Fed now had people tricked, but through the various exposing of the Fed now failure, the failure that is Fed now, over various articles written by reputable sources, which I have shown you on this channel, you see that they can't touch us. It's not a guarantee. It's not financial advice. Just my humble opinion. We're going to take those trillions. Oh yeah, right? I mean, as of right now, if things change, they change. I can only say what I see right now. Things are looking good. Let's scroll down here, continue on. This article explores key use cases that DLT and digital assets have to offer for treasury. Big money game. And the benefits and challenges that treasurers need to understand as they move forward in their journey of integrating these emerging technologies. I tell you, it's coming. They can't deny it. And I got another article coming after this one that's even more powerful than this one. We're just starting off here. It says, just in case someone wants to question, like, this is just EY.com. Come on now. Oh, I have more. It says, of integrating these emerging technologies and asset classes in their organizations, right? So then they have a beautiful chart here. It says operational liquidity. That's something people better keep in mind in the future. Investment portfolio, risk management, data technology, digital asset regulations, because you can enforce those regulations through smart contract. Oh man, we're going to devour them. Let's scroll down. This section is titled Operational Liquidity Optimization. Who does liquidity better than us? Who has a bigger liquidity cushion than we do? Who can accrue more liquidity than we can? We can reach into the unbanked. We can reach into the banked. We can reach and pull money from the high and from the low. We can do what they can't, and they know that. But this is also why they shake so many people out. They're taking their time. But there's another reason why they're taking their time with the new financial system. We'll get to that another time. It says financial institutions require significant liquidity to ensure efficient operations in a regulatory compliant manner. Operational friction is such as settlement timing, market fragmentation. I told you, they need that interoperability so bad. Liquidity and interoperability, that's at the crux of what we do. How are we going to lose? We have what they don't need. How do we lose? I mean, listen, you have your own opinion. I'm not here to convince anyone of anything, but let's keep going. Market fragmentation and other issues require a level of liquidity, quote, working capital, unquote, that is expensive to find. I want to laugh so badly. Let's keep going. DLT has the potential. I like to say potentiality. Sounds a little bit better, but let's keep going, bub. Potential to significantly reduce these frictions and their associated liquidity requirements. For example, to facilitate gross intraday settlement activities. That's where you get that high volume, high value. Treasurers are often required to maintain intraday liquidity and pay for intraday credit lines. This has an impact on the financial institution's profitability. I told you they need to make money. They want to make money. And you can't make bigger money than what we're bringing to the table with this opportunity that is distributed ledger technology. One of the reasons why they will congeal with us, everything will be customized. They don't know how to do anything that's not fragmented or siloed because they're all selfish companies. I get that. I understand. That's just the nature of the business. But what does that mean for us? That means they need something to connect everything together because they're never going to have it. That's just not the nature of what they do. And when we connect them, if we connect them, I don't want to make it sound like a guarantee, then that is the flip of the switch moment. All those connections, boom, 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 boom. And you start to see that number go up, 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 up. Oh yeah, up and away. But let's keep going. Just a little bit more. We'll move on to this next article here. We got a lot to get through today. It says here, this has an impact on the financial institution's profitability and ability to raise funding during stressed market conditions. You don't say, yeah, because stressed market conditions don't typically have to have an effect on the machine that is running the system. See, when you're pulling global liquidity together, but it's backing a local system that requires liquidity, that's something that they haven't been able to fully experience as of yet until now. Now that opportunity is there. Right? Let's keep going. DLT-based intraday liquidity solutions sounds interesting. Like, is there a bank coin perhaps that specializes in I don't know, liquidity? I know, I'm just joking about, hang in there with me. It says such as intraday repos and real-time collateral and FX swaps offer access to liquidity with transactions that settle instantaneously or within minutes using smart contracts. DLT enables this liquidity to be used for shorter term time periods than traditional solutions. We'll stop right there. We may come back to this, okay? There's a lot to this article here. You can go read it yourself. There's a lot to this article. Let's move on here because I'm going to get to this one, all right? All of this, in my humble opinion, if you didn't get to everything I was alluding to, is XRP related. You could throw some XLM in there, Algorand as well. But I'm thinking about XRP when I'm reading these here. We'll get to a little XLM information later. federalreserve.gov. And it is titled, Using Distributed Ledger Technology for Payment Directories. All right, so the Fed has continued to speak about this. It begins here. It says, currently, payment directories, this is what's important here. I want people to understand none of this has changed. We have the solutions that they need. Currently, payment directories in the United States, both P2P and B2B, are highly fragmented. That has not changed. Now, FedNow was an experiment to see if they would be able to shift things into their favor, utilizing a more traditionally based system, right? But it didn't. It failed because most of the banks did not sign up to use FedNow because it's very disadvantageous to them, right? Which means what? That means we're still in the driver's seat. We still have the best solution. All right, so our trajectory remains the same as of now unless things change. Then we'll all know about that, right? It says, are highly fragmented and not interoperable. They have no interoperability. Directories operate in closed ecosystems because service providers treat their network and accompanying information as a valuable asset. Closed ecosystems typically arise from a lack of common standards, which may lead a firm to protect a network that they have spent months and years building over time. See, we can connect all of them. They can have their customizations, and we can still bring them together. Distributed ledger technology has the potential to change this dynamic by offering new ways to think about how directory services can operate. A potentially defining feature of DLT is that it allows information exchange without the need to transfer ownership of data assets through a distributed and possibly federated database model. Distributed ledgers have the potential to provide new opportunities for value creation and to address market inefficiencies by reducing the cost of managing a common ledger, democratizing control of information among participants, eliminating the need for a central entity to manage the database, and allowing for localized control of potentially sensitive business and customer information. DLT encompasses the processes and related technologies that enable participants in a network to maintain a synchronized, distributed ledger without the need for a central administrator. In other words, they need what we have. And although they are scrambling to find an alternative solution, they have been for quite some time, they haven't been able to do such a thing. So you've seen that out of necessity, they've begun congealing with a lot of these different utility coins, from testing out different XRPL-based offerings to testing out different Stellar-based offerings, Chainlink, Algorand. You see them all wrapped up with these different financial systems. It's just a matter of time. So this document here is from the Bank of International Settlements, okay? And I just want you to see the significance of them currently and recently still talking about Stellar. That's major. Stellar's in deep with them. I was telling you this before. I showed you multiple things over the last few weeks of how tied up they are with the Bank for International Settlements, including that issuance of a green bond, which the Bank for International Settlements made clear is just the beginning of what they intend to do in the future. Whether they keep their word or not, how would I know? I don't know. I just know what they've said. That's all I can present to you here. But this is BIS work document 1112, all right? And we're going to begin here on page 17, right in the middle of it. Now, they're talking about, well, let me read this little tidbit to you here. Bear with me, okay, because it's going to be impactful. It says, foreign exchange trading in the marketplace, foreign exchange trading, keep that in mind, must not fragment foreign exchange markets globally. But here's what they're not delving into, is that markets are already highly fragmented. But let's keep going. A trade-off seemingly arises. The more liquidity rises on the digital marketplace, the less liquidity may exist on another, more conventional foreign exchange markets. And markets could become fragmented, I guess they mean further fragmented, in the sense of trading the same currency pairs at different prices. Not going to happen with automated market makers, but I think they're going to say that. The simple solution is ensuring that the digital marketplace is open to market makers. Okay, there you go. That also take part in more conventional foreign exchange markets, so they may efficiently arbitrage any price deviations away. Indeed, a key characteristic of the marketplace is its openness to participants of any size, given the low trading costs and significant transparency. So now let's move on here. It says here, fifth, and important, we're getting to the Stellar part, and a little bit of Ripple as well. It's very interesting how they always go together. It says, fifth, an important question is who builds and operates such a marketplace, and which rules govern it? International financial organizations could do so. So they're leaving the door open. But listen to this coming up. It says could do so, since they already have well-established governance standards and some experience in making international transfers to and from central banks. Another question is whether the public or private sectors should be or will be involved. Of course they are, but watch what they say after this. They guarantee that they're going to be involved. But watch this. It says, while most efficient or socially desirable setup may be debated, the private sector is rapidly building this infrastructure. So then how would it even be feasible that the private sector doesn't control most of what's going on if it is what is rapidly building this infrastructure? Then it controls this infrastructure. But what are some of these private sector participants that they're talking about? Well, let's go into this next paragraph here. A little eye-opening in my humble opinion. 3 models arise. 3 models of what? You mean of who these private sector individuals are who are building the models that they're building? Well, who's that? 3 models arise. A private settlement asset in marketplace, such as Ripple's XRP. That's interesting. Or it says an open source marketplace, such as Stellar Foundations. That's very interesting how out of all of these hundreds upon hundreds of distributed ledger technologies, they reference the Bank for International Settlements. This is their document. They reference Ripple and Stellar. I mean, maybe this is a reach. You can tell me if this is a reach. You make up your own mind how you feel about these things. But that indicates to me that the future remains very bright for Stellar and for Ripple. The bank, they have the trust of the Bank for International Settlements. They're not going anywhere. And why? What are they highlighting here? They're highlighting their DLT extensive capabilities, right? Now, this is interesting here. They do reference another something else here, but let's keep going because there's something I want to add in here. It says, and a marketplace and settlement asset. Wait, let me go back. I want to read this clearly to you. It says, and a marketplace and settlement asset based on unbacked crypto assets. What? Wait a minute. You tell me your interpretation of that. Let me read that whole thing again. I'm telling you, it's getting major. Look what they just said. 3 models arise. A private settlement asset and marketplace such as Ripple's XRP or an open source marketplace such as Stellar Foundations. It says, or more recently, DeFi networks. And a marketplace and settlement asset based on unbacked crypto assets. Then they reference something that they call Strike. I don't know what that is. It's such a Strike, which leverages Bitcoin and the Lightning Network. So they acknowledge that it's possible to institute one of these systems and have everything backed by a crypto asset that's highly liquid. And what do they say about XRP and XLM? XLM is said on their website, Stellar Foundation website, that it's there to provide liquidity for otherwise illiquid assets. And here you have the BIS hinting towards a similar possibility, of course, not a guaranteed possibility. They acknowledge that that is there. Then they use something else as an example of such. That's interesting. All right. Now, I don't know where things are going to go. I'm just saying things are looking good. So now we're going to move on to a little bit of Cardano news. This is from CoinGape.com. This article is titled Cardano Price Prediction Experts Foresee Surge Beyond $1 in January. It says Cardano, the 8th largest cryptocurrency by market cap, is currently showing bullish signs on its one-day time frame with a trading price of 60 cents. I don't know what it is right now. This is what they wrote at that time, but markets have been down. They've been very volatile as of the last day or two. So you have to go look at the charts to find out the current price, okay? But I don't think that changes the future. That Cardano definitely is bullish, super bullish in my humble opinion. I currently don't have any ADA right now. You know, we had ADA in the first bull run when it was super low and nobody believed in it. It went boom. I definitely took profit on ADA. I definitely did. And I'm just keeping my eye on it. You know, there's quite a few utility coins that are looking really good. Traditional. They've been around for a while. They're well established. Those are the ones I'm primarily looking for massive, safer, can't say safe, safer gains, you know. Anyway, So it says here, despite a slight 28.28% decrease in the last 24 hours, the digital currency's trajectory suggests a potential retest of the $1 mark in the near future. Listen, if the market continues on in a bullish way, yeah, I can see that happening. I see a lot of different assets increasing in value dramatically depending on what the market does. Like, let's say the Bitcoin ETFs actually get, are approved, and, the SEC and the US Treasury stop putting their elbow on everyone's necks, because that's really what's happening. You look at what's going on. The SEC just keeps playing this game of, we're not going to approve you. We're not going to approve you. They're looking for these little nitpicky things to not approve the Bitcoin ETFs on. So then it shakes the market. It definitely does, right? Because people are going to take profit. Miners are going to take profit while the prices are up. So once they start dumping all of those coins and things like that, I mean, correct me if I'm wrong. Maybe you have a different outlook on this. I can respect that. Maybe you can correct me if I'm wrong. I'm always willing to learn. But they start dumping those tokens so they can take profit at a respectable level before prices go down. Then that causes prices to go down, because they fear prices dropping, because if the SEC says, hey, we're not going to approve that Bitcoin ETF, then that's a problem. And the markets can sell and the markets can dump, right? They can correct. Then you have the US Treasury at the same time. It's always a double team. I question that. So then you have the US Treasury say, well, nobody wants our bonds. So then they do what? They up the yield on the US Treasuries, which obviously, high yield on Treasuries, a stronger dollar. You did see the dollar get stronger, right? So then that brings things down as well. You saw that happen recently. Now everything is red. So there's always this double team. There's a lot of this. I think what they're doing, they're showing that they can control Bitcoin. They're showing people, but the people just don't want to believe it. They don't want to acknowledge it. It's like, if you want to be a moneymaker, you got to take your emotions out of this at some point and look at things and say, what is going on here, right? And they don't like having something that they can't control. And I think now what they're doing is starting to figure out, hey, we can control Bitcoin to a degree just by manipulating the minds and the emotions of the people, right? And so I think that's what they're testing out. They're sort of testing the waters of that. Before they unleash Bitcoin, they want to know that they have this control mechanism. They can come out and say something. It could be the Fed say something about interest rates. Listen, that's going to be ongoing. This is going to be an ongoing problem where the Fed is always going to have to step in every once in a while, say something, do something, manipulate the market somehow, interest rate manipulation of some sort. Because I just don't see things changing for the better for quite some time. And I think they've iterated the same. So they need to know before if they're going to unleash Bitcoin, because there's been some very suspicious words said from these regulators about Bitcoin as of the last 4 or 5 months. Hopefully that negativity doesn't rear its ugly head. But they want to know that they can control it to a degree, in my humble opinion. I think that's a lot of what we're seeing now. And also they want to flex their muscle a little bit and show these big corporations, which I don't know why they want to do that. There's a war brewing between regulators and corporations, which is very interesting in my humble opinion, since some of the regulators are in the pockets, in my humble opinion, this is what I'm seeing, are in the pockets of these corporations. Like, oh, well, I won't, got to be careful saying some of these corporations' names, because they definitely will make you feel it. But anyway, now let's move on here to a little bit of Solana news, and then I'm going to be off and go make the members only video. All right. So now this article here is titled Solana NFTs sales overtake Ethereum. It says here, Solana's NFT sales volume surpassed that of Ethereum in December 2023, marking the first time this has occurred. Now, let me pause right here. Someone asked me about XRPL NFTs. I have no idea about XRPL NFTs. Like how they're doing, what's on the XRPL. I haven't been too deeply ingrained in the NFT sphere. I know there's a lot of people that specialize in that now, like that's become its own thing solidly. But I'm not up to date on what's going on currently with the NFTs of different chains, okay? I just wanted to put that out there. So it says here, according to data from CryptoSlam, Solana's NFT sales reached approximately $366.5 million, while Ethereum sales totaled $353.2 million. When excluding wash trades, Solana sales remained strong at $366.5 million, nearly matching its all-time high of $373.5 million, set in October 2021. Now, this only matters to me so that I know the health of Solana. Are people using it? You know, is it going to remain strong into the future? Things of that nature, right? And right now, as far as NFTs, what I do know, Solana looks strong. Algorand looks strong. I believe Hedera was strong last I checked. So that could definitely be very positive going into the future. Now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everyone, let's get to the money.